Coming up on Market to Market, the nation digs out from heavy snow and cold while preparing for winter flooding. We'll also take a look back at the stories that affected agriculture in 2022 and market analysis with Don Roose.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, December 30th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. The answer to high prices is generally high prices, but politicians and federal economists have spent the past year trying to keep the economy from spiraling out of control. The Federal Reserve raised interest rates 7 times in 2022, pushing the rate paid by banks 4 percentage points higher. More hikes are expected in 2023. The annual inflation rate rang the bell at 9.1% in June, backing off to 7.1% in November. The price of food rose 10.6% over the past year, with bread climbing nearly 40% and milk by almost 30%. A bright spot in the economy was USDA's prediction that net farm income will have risen nearly 14% in 2022. That number is expected to be overshadowed by the expectation that production expenses will climb nearly 19%. Weather swings continue to whipsaw everyone as the switch flips from sub-zero to spring-like conditions across the country. While next week is predicted to be a bit milder, the past week was a wake-up call that it's still winter. Peter Tubbs has more.
As one region dug out from record snowfall, another region cleaned up after heavy wind and rains. Erie County, New York, home to Buffalo and many of its surrounding suburbs, began the arduous task of digging out from over 40 inches of snow that were driven by hurricane-force winds. At least 37 people died in the county as a result of the storm. Several 100,000 customers were without power for multiple days as massive drifts paralyzed snowplows and emergency crews throughout the region. Officials are concerned that warm temperatures will turn the massive snow problem into one of flooding. The 10-day forecast in Buffalo is for temperatures in the 40s and 50s with periods of rain. Millions of Americans hunkered down as unseasonably cold temperatures covered the eastern 2/3 of the country. A weekend Midwestern storm with high winds and blowing snow was all but a memory as roads were cleared by midweek. A few cars remained for crews to pull from roadside ditches. A drop in temperatures caused a series of water main breaks in Memphis, leaving thousands of residents without running water. At least 16 water systems in Georgia also experienced problems due to the cold. The coasts of Oregon and Washington were battered by monster waves and strong winds this week. 30-foot waves driven by 80-mile-per-hour winds interrupted power for over 160,000 customers in the region. A record-high tide of 18.4 feet flooded portions of the capital city of Olympia. The California coast saw flooding after heavy rain. Salinas, California neighborhoods flooded after a night of storms. No deaths were reported, but damage was widespread. With more precipitation possible for the western third of the country in early January, more flooding may be in store for California and other states. For Market to Market, I'm Peter Tubbs.
Weather and policy stories are constant each year. Themes emerged in 2022 of higher land, fertilizer, and commodity prices. But what fell or didn't fall is what made headlines this year. This look back is our cover story. The meat packer started the year in the driver's seat on packer margins.
I've said it before and I'll say it again. Capitalism without competition isn't capitalism, it's exploitation.
In early January, President Joe Biden announced the allocation of $1 billion to advance expansion of small to medium-sized meat packers and processors. The Senate Agriculture Committee held a hearing in April on a proposed bill that would require meat packers to buy half of their cattle on the cash market and create a library of contracts for all the nation's cattle sales.
And I dare say that if we don't pass this bill where we have some transparency in this and we don't make an effort to reestablish the price, the cash price, I'm not going to have any. When that happens, I'll go the way of most of the producers in this business.
It's not a conclusion that there's anti-competitive conduct, and in fact, it's rather competitive within this industry. Likewise, there's not any research that shows that mandating cash trade is going to make for better cattle prices. That's just not part of the research that I understand.
That same week, the House zeroed in on smaller producers affected by the tandem choices of contracts known as Alternative Marketing Agreements, or AMAs, and the potential for more lucrative price discovery at auction.
They're basically trying to cram our industry back into the bottle, the way it was 20 years ago, 15 years ago. That's not healthy for an industry. Change is a part of the industry, and especially if you look at the impact it's had on meeting consumer preferences, nothing could be more advantageous for the industry to listen to your consumer.
By year's end, no legislation emerged from Congress for signature by the president. High pathogenic avian influenza, or HPAI, emerged again in 2022. Bird flu would strike millions of birds in the U.S. and in nearly every state, even after changes were made since the last big outbreak 8 years ago. While fall has typically brought about a resurgence of migratory birds beginning their journeys to warmer climates, this summer also included what the World Organization for Animal Health called an unusual persistence of the virus in wild birds. Nearly every state has reported a positive flock where more than 50 million birds have died or been euthanized. In late February, Russia would invade Ukraine. The fallout locally in Europe strained supplies of energy and grain from the region and would reverberate across the globe as countries lined up in support of Ukraine. Commodity markets would respond to the flow of grain through the region. Late July brought major flooding in Kentucky. The eastern Appalachia region was damaged with 8 to 10 inches of rain. At least 37 people died in the early hours of the storm. More than 1,300 needed rescue, and thousands more were without power for days, ending the wettest July on record in Jackson, Kentucky. A drought record was reached in California. The past 3 years have been the driest on record in California, according to data dating back to 1896. Although the just completed 2022 water year was slightly wetter and cooler than the 2021 water year, it was still 24% below the historical average of precipitation. Dry conditions in the upper Mississippi led to problems downstream because of a lack of water. Dredging would be used to help get traffic moving.
It's definitely created navigational hazards along the marine transportation system, but we've been working very closely with the Army Corps of Engineers, who have put in a lot of work over the past decade in preparing for a situation like this.
The lower Mississippi River went through a limited barge draft restriction that is standard on the upper Mississippi.
We're about 40%, in some cases half, 50%. You know, the industry is very resilient, working with the Corps to make sure that, let's say the Corps is dredging 12 hours and then will stop for 12 hours so that queue of barges and boats can get through. At its worst, we had 2,200 barges directly impacted with 150 boats waiting.
The river level at Memphis neared the minimum operational limit in October, but rose 16 feet the next 6 weeks. Some barge operators have reduced the number of tows by half, and those tows include a reduced number of barges due to width restrictions on the river. Barges are often loaded at only 75% of capacity. Recent rains in the lower watershed have raised river levels by up to 10 feet in sections of the channel. But the long-term prognosis is for lower than average levels to be norm until the drought is broken. Another of the infrastructure hiccups came from the railroad. Back in September, an initial agreement was reached between the 115,000 rail workers and their employers. This provided the biggest raises in 40 years, but it was more than money. Changes in policies that allow more flexibility in taking time off from work, including the right to take unpaid medical days off without being punished.
There's a lot of areas of this country where your option for transportation is rail, and it's rail. That's your only option. And maybe some areas of the country where you're close to the inland waterway system, you can move some freight at the margins to the river, but that's only limited.
Economists had estimated a shutdown of the rail system in the U.S. would have cost the economy up to $2 billion per day. Over 40% of U.S. cargo shipments are moved via rail, and a strike could have caused cascading shutdowns throughout the economy. However, not all unions ratified the agreement, and Congress stepped in with last-minute legislation in December.
Next, the market-to-market report.
Profit-taking and limited volume made for some volatile sessions ahead of the three-day weekend. For the week, the nearby wheat contract added 16 cents, while the March corn contract gained 12 cents. Soybeans rallied to new highs this week on word of COVID restrictions being lifted in China, predictions of a smaller crop in Argentina, and news of tighter overall supplies. The March soybean contract bumped up 39 cents, while the March meal contract moved $15.70 higher. March cotton declined by $1.84 per hundredweight. Over in the dairy parlor, February Class 3 milk futures fell 13 cents. The livestock market was mixed as February cattle added 15 cents. March feeders put on 223, and the February lean hog contract shed 13 cents. In the currency markets, the U.S. dollar index cut 86 ticks. February crude rose 72 cents per barrel. COMEX gold strengthened $17.70 per ounce, and the Goldman Sachs commodity index finished nearly 3 points higher at 610.10. Joining us now is regular market analyst Don Roose. Hello, Don.
Glad to be back, Paul.
Quite a week, huh? I mean, Monday was a dud. Tuesday, Wednesday kind of picked up steam, and then Tuesday was a dud. Sorry, Monday we were celebrating a holiday. But Friday and wheat really took off. Why?
Well, I think if you look at these markets, a lot of them, including the livestock, was all about a lot of weather. And, you know, in a thin market, you can move a market pretty aggressively. But when a lot of it, we're watching the weather in Argentina. It hasn't really changed a lot, so we added risk premium. We had, back to the weather, we had transportation slow down. Very often, when you get your first big storm like this, transportation slows down and you add some weather premium to the market, corn, soybeans, wheat with a winter kill, because consumption goes up by the livestock.
Well, and the winter kill is going to be the story that we maybe figure out a little bit next week on wheat. Let's talk specifically about this first contract, the March contract, and then into July. 16 cents higher on the week. Domestically, is the weather story enough to keep driving this thing higher?
Well, remember, the wheat market, we're only like 7% of the world total all trade, so it's not really. The big thing that you have on the wheat market is Russia continues to sell wheat below the world market on rallies. But the thing that really brought us to the upside was the winter concern, the fact that Australia had a bigger crop than we thought. They pressed us to the downside. Their harvest is basically behind us, so we're getting that post-harvest rally. And we know Argentina had a smaller crop. They're about 91% harvested. So I think it was a relief rally from the southern hemisphere, and then we had issues here in the north. So going forward, the wheat is probably going to be a switch to what happens with our crop in North America as we get into the spring.
Can you help us on a little range there? How much more steam we might have?
Well, remember, the wheat market came from, in February, from $13, and then it's drifted just lower until about 3 weeks ago. We go to $7.25. Now we're trying to bounce back a bit, got close to $8, $7.99 on March wheat in Chicago on Friday. But I think what we're really saying is probably $7 is too low. $8.50 is too high. Caught in that range. Funds keep trying to press the market to the downside, but we'll see once what happens in Ukraine with the shipping.
We have a big number in soybeans, but let's start with corn because it had a nice number too. It's approaching March corn approaching $7 here again. Another week up. How much more steam left in that one?
Well, look at what happened to the corn market. We dropped down in ranges. We were 680 to 7, then we dropped down to 660 to 680, then to 635 back to 660 in a range. Now we're just moving back to the upside, but we're in a really tough resistance, Paul. We go to 685 on Friday. Every nickel up is going to be tough, and anything happens with improved weather in Argentina, and I think the market comes under a lot of pressure pretty darn quick.
Well, I had written down lower crude on Thursday also. Where's the crude relationship to corn right now? Normally it's been so tight, but is it still, are they still right together?
Well, we're a petro grain, there's no doubt about it. And, you know, look at, you bring up the crude oil, but our ethanol consumption, production is under some pressure. Profitability just isn't there. Our exports on corn are down 47% versus a year ago. So we don't have it's all about the supply problem. That when we talk about the demand, you've got a real issue with the corn.
We're still lower on that December contract. Does that have any range higher?
Well, the December corn, you know, the same thing. It's coming under some pressure. It's all about what's going to happen with Argentine weather. Gave us a little pop to the upside. They're about 67% planted. About 15% of their crop is good to excellent versus 58% a year ago. So it's a problem with Argentina. June, July, they'll have basically their harvest.
Then the beans story. 15 was that number we just could not erase, kept hitting our head on it, finally broke through. Katie barred the door, Don.
Well, we got within 20 cents of contract highs on November soybeans, just over 30 cents away from contract high on the March soybeans. So you've had an awful lot of risk premium into the market. It's going to be a dangerous 3-day weekend, Paul, because if the weather pattern changes at all, a lot of premium comes back out of this market.
Well, and that's kind of what set us up on Tuesday, right? Because we have to think we had a shortened trading day last Friday because of Christmas Eve. Then it never rained and it got drier. We're not quite set up as long. We're not going to have trading Monday or Monday night. What do we do to prepare ourselves on soybeans come Tuesday morning?
Well, if you look at it from a producer standpoint, look at where we're really sitting. You know, you're sitting basically close to contract highs, areas that have been very hard to get to over history, with an economy that is still very much shaky, with Brazil that probably has a record crop, probably makes up for the loss in Argentina. The government, I just want to tell you about soybeans, where we're really at. Our carryout's running 220 now, basically 270 last year, 250 the year before that. So our carryouts aren't a lot different the last 3 years, but government's forecasting $14 this year. Last year, $13.30, but where I'm going, it was $10.80 2 years ago. Carryouts aren't that much different. We got the same thing going on in corn. It's, have we moved to a new level? For what reason?
Well, I'm going to tease Market Plus because we dare you not to watch it, because we know many of you don't. But I'm going to put Don on the spot about 2022 surprise story and also 2023. But we are going to take a question now from Phil in Dresden, Ontario, Don, kind of get you to think about 23 a little bit when it comes to soybean. He goes, can we expect seasonal highs in corn and beans in 23 in June or July? Or does the size of the crops in Brazil and or the missiles launched over Ukraine skew that seasonal narrative in 23?
Well, I think what you have to be very careful of, and this is what we've been focusing on, is upside down, short crop, long tail, that you put your tops in more at harvest, which it seems like we have, except soybeans rallied back. And then if South America gets a bigger crop, and if La Nina, which it's been dying, if it switches to an El Nino in the winter and we get a big crop, you have just the upside down from what you normally would think from a seasonal. You have what we call a contra-seasonal. So at these price levels, with what's going on in the world, with what's going on in the economy, you have to be a little bit concerned what could happen. And you have to ask yourself, Paul, what do you think the upside is from here?
And what do you do to take advantage of that? Because things change quickly.
They change very quickly in this fast-paced world anymore. And, March corn is trading about 7 cents higher than July, so there's really not an incentive. If the basis is right, there's not really an incentive to sit there. Change your ownership, which is what we're seeing people do. Change your ownership to options in some way and take your money off the table.
There's something about hay in the barn, too. I think you missed one more part of that phrase, Don. Speaking of the barn, the cattle, it's cold in cattle country, or it was last week. We've since recovered. Moisture is coming back into some regions, maybe not enough in the right spots. What's the biggest influence on live cattle right now?
Well, again, we're back to the weather. We first big weather storm, we added some premium back to the cattle market, and much like the grain market, you put the risk premium in, but then you also take it out. On Friday, we started to see it taking some of that premium back out. It's a cyclical bull market. The industry is very bullish, but when you look at it, you've got April cattle of 24 sitting about 169, April of this year sitting about 162. So you got no shortage of bulls in the market, Paul.
Does that mean there's room for me to get in? Or have I missed my chance there?
Well, it's not a surprise that we're a bull market. I guess that's one way to look at it.
Well, what's going to take us out of that then?
Well, the thing that's happened in the cattle industry before is we run into a black swan. Who would have heard of BSE, a few years back, the economy. So it's not the supply side of the market. It's more the demand side. And that's what I think you have to be concerned about. If you're looking at not risk management at high prices, you're not afraid of the black swan.
For those in the feeder market who are trying any way they can to expand, to hold back, to pull something, help them out. Are they making the right decision?
Well, usually the cattle cycle, Paul, is 3.5 years up, 3.5 down, and we've been in a 4-year break. So, yeah, this is a time frame where you probably should try and expand if you're a cow-calf operator. It's been a tough sled here for a while, drought conditions, all kinds of different problems. So it looks like we're in that expansion phase, and it looks like the cow-calf guy finally has his turn.
How long does that last?
Well, I think you probably are talking a good 3 years.
So you're saying we're at the beginning of that cycle?
We're at the beginning of the cycle, so it should just be starting. And that's, look at the placement figures in December, probably going to be down 8 to 9%. Fourth quarter supplies, we're just starting the cattle bull market, although the futures, market has it dialed in. From the fourth quarter of this year to the first quarter of next year, we're going to have a record drop in production. So, and then it just goes on from there.
Do you know anything about geography in the sense of areas that are stronger or lighter, or any shifting, maybe longer term cattle production?
Well, I think if you look at the cow-calf operators are pretty much in, the rugged ground. So I think that's the area you're going to have the expansion. And we know that we're going to have a dislocation of feed supplies this year, 800 million bushels probably. So I think what that means is maybe you're going to see some of the feedlot production move further north.
I should ask before we skip, did everybody miss their feed need opportunities to cover anything right now?
Well, we're on a 50-cent rally in corn. We're overbought. We've been in uptrends, buy signals for 3 weeks on corn, for 6 weeks on soybeans. So it's
hold if we can, is what
it's got a little bit of a beard on it right now.
I like that one too. Man, you're bringing them all out today, Don. Hogs, as we close out here, we've really not talked about China in this discussion very much. We always kind of look at them to gauge what their interest is in our product for exports on pork. We've bounced off a high now and come back a little bit. Are we pausing to go back higher, or are we going to keep falling?
Well, you bring up China. China hog prices hit a 7-month low this week. So, and that's because they're expanding. So our export pace is supposed to be down 2% next year. But, we've been in a contraction phase in the hog industry, much like the cattle. But the last hog and pig report, the Feb Fairwings, are forecast to be up 28,000 on the sows versus a year ago. So it looks like we're trying to build the herd a little bit. But the bull story in hogs is probably the bull story in cattle. You're going to keep the spread relationship kind of close, the demand kind of close, so maybe shifting some of the demand. So the last year, remember, hogs in August went to 123. And is that possible again with the same about supplies as a year ago?
Before we go real quick, we talked a little bit about oil. We got to close to 60. We've pushing 80 again. What's a range here in the first quarter for us in 23 on oil?
On the crude oil?
Yeah.
Yeah, well, I think from the crude oil, I think you're probably, if you look at it, Europe tried to talk Russia into selling them crude at $60 a barrel. That was too low. So I think $70 is a sweet spot. You hear people talk 100. That's just too high in this economy.
Well, I appreciate you spending time with us, and we'll get your take on 23 and wrap up 22 in Market Plus. Thank you, Don.
Thank you, Paul.
All right, that's going to do it for this analysis, and we'll continue our discussion about these markets, answer your questions in our Market Plus segment. You can find that on our website of markettomarket.org and also on YouTube. All of these resources that I mentioned are free, by the way. Also on YouTube, the show, the Market Plus, and our stories. They get posted each and every week. Join our family by subscribing to the feed of @MarketToMarket. Next week, one of the nation's leading duck producers learns to hit life's economic curveballs. Thank you so very much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.